You're listening to the Unlocking Africa podcast.
And what I was seeing from the founders that came out of emerging markets was that if you give them an inch, they'll run a mile with it. Africa is one of the fastest growing economies and regions in the world. It's very exciting too. Every investor is interested in fintech in Africa. For us, it's not just about the commercial and financial potential of the sector, but also the potential for being able to help the community too. One thing that's exciting is our partnerships with accelerators on the ground too. One thing that people don't realize is that 97% of startups fail in the first 3 years. Most of the time, you don't know what you don't know.
Stay tuned as we bring you inspiring people who are unlocking Africa's economic potential. You're listening to the Unlocking Africa podcast with your host, Tessa Adamu.
Welcome to the Unlocking Africa podcast, where we find amazing people who are doing amazing things to unlock Africa's economic potential. Today, we have Samantha Lee, who is an angel investor and founder of StoneSoup Partners. Welcome to the podcast, Samantha. How are you?
I'm good, Teresa. I'm very excited to be here. Thanks for having me on this podcast. I've seen a couple of your other podcasts and it's always an interesting conversation. So definitely looking forward to bringing a hot seat and the tough questions that you're going to throw at me.
Fantastic. I know we've been planning this for a few months with different conflicting schedules. We finally got a date and time together. So yeah, thank you for joining us today. I'm glad that you've listened to the podcast before. I like to start from the beginning. So before we start the conversation, if you could please introduce yourself and tell us a bit more about Samantha Lee.
Hi, everyone. I'm Samantha. As Tosa mentioned, I am an avid angel investor in African startups, and I also have a fund called StoneSoup Partners, where we invest in African founders that we believe are doing well by doing good. This spans a couple of different sectors, including healthcare and fintech, and any other sector that we see have potential in being both profitable in the long run, but also have an extensive impact on the communities that they're building.
Fantastic. Thank you for that introduction. So, as we mentioned, you are the founder of StoneSoup Partners. I was hoping we can go into a bit more detail regarding the company, the work that you're currently doing in Africa, and just, why Africa? How did you come about investing or being interested in startups in Africa?
Yeah, as I like to say, I'm probably one of the very few people in the venture capital space that came in through the impact space. So over 10 years ago, I had started a not-for-profit consulting firm, working with nonprofit leaders, social entrepreneurs, corporate leaders too, who wanted to scale their impact and their social initiatives globally. So after working with over 200 founders through that, I realized that it's really hard to raise funding for early stage impact ventures. I was meeting a lot of really incredible founders and entrepreneurs who had a great vision of wanting to use their skills and talents, not only get rich, but also to give back to the community and to solve all the problems that they were seeing their neighbors, their brothers, their mothers face in their daily lives. So everything from getting access to healthcare services to wanting to provide more financial services so that their community can also lift themselves out of poverty and be able to fulfill their potential. So something that I really like about working in emerging markets, it's where people don't go. When you work in a low resource environment, oftentimes you have to be extra resilient and extra resourceful. And what I was seeing from the founders that came out of emerging markets was that, if you give them an inch, they'll run a mile with it.
Yes.
So the ability to take the resources that they have, no matter how much or how little, and be able to turn that into something incredible just blew me away. So more recently, I worked with a Nigerian healthcare company, and that allowed me to explore the region deeper, and not just the entrepreneurs, but also the people. And I think there's a spirit there. I was meeting a lot of patients who were able to turn a bad thing, so for example, a diabetes diagnosis, and turn it into something positive. And a lot of them reflected that, they saw it as an opportunity to get their lifestyle in check, to be able to lead a healthier lifestyle, to eat better, to exercise more. And contrary to what people believe, it actually made them feel healthier and younger too. So I think for me, just being able to immerse myself in the community and really enjoy the people I was meeting kind of brought me to where I am today. And this is also reflected in macroeconomic trends as well. Africa is one of the fastest growing economies and regions in the world. And I think that's something for me that is very exciting too.
Amazing. Thank you for that concise overview of starting out in impact investment and your introduction to investing in Africa. We know you have a passion and interest in terms of investing in Africa, but are there specific sectors, industries, or markets that you're currently focusing on?
So for me, we find that both healthcare and fintech are probably the two that we want to focus on. Like I said, a lot of the fund is built on the fact that we want to invest in founders who are doing well by doing good. And these two sectors are the ones that, as of yet, we see most potential in doing both. So obviously, fintech, I need not say very much about it. I know every investor is interested in fintech in Africa. A lot of the unicorns are actually in fintech right now as of today. And fun fact, 54% of all venture capital funding last year actually went to fintech companies. But for us, it's not just about the commercial and financial potential of the sector, but also, the potential for being able to help the community too. And we definitely see the access to services as a core part of why we think that we want to invest in that sector. Everybody needs access to funding. And in a lot of countries, that's typically through a bank. But for a region like Africa, it's a lot harder because a huge part of the population is seen as unbanked and is still yet unbanked. And banking the unbanked in Africa could actually generate 129 billion USD in revenue. And that's something that a lot of people don't realize. And that for us represents an untapped potential. I think something that we see that's exciting about investing in fintech in Africa too is that it's one of the few sectors where investing in a developing economy actually has an advantage. Because in a lot of other economies, there is such legacy technologies and systems already. So for example, here in the US, you go from having a bank account or going from cash to having a bank account to a credit card, and then eventually to now we're starting to see e-money and e-wallets like Venmo, etc. But because in huge parts of Africa, a lot of people don't have bank accounts and credit cards are practically unheard of. So you're actually able to bypass two levels of legacy technology and leapfrog straight from cash into mobile money and into e-wallets and e-money. So something people don't realize is that Africa is actually the most developed market for mobile money, and it accounts for 2/3 of the global mobile money transactions in 2020 with 320 million users. And that's huge, and that represents a huge potential and huge opportunity. On the other side of it, I think we're also hugely passionate about healthcare. Personally, having worked for a Nigerian healthcare company, I've seen how access to healthcare makes such a big difference in people's lives. And in fact, the African population is growing immensely. We expect to have about 2.5 billion people by 2050. And that's a huge proportion of the world's population. In fact, Africa is expected to become the second biggest market after the US by 2030. And so that's something for us that we see that there is a rise in kind of like prioritization of healthcare. There's a growing investment in infrastructure, especially post-COVID. And I think from an impact point of view, like nothing's more important than your life and the life of your loved ones. And we see there's definitely a huge potential there, both in terms of the impact that we can create, but also the financial returns of the investing in that sector.
Thank you for that very comprehensive and detailed answer. So you've kind of focused on your areas of interest or focus are fintech and healthcare, and your passion for supporting the community and making a difference for people on the ground. You're currently based in California. California has had a history in terms of investing and innovating in startups, so you've got a great foundation there. But your focus is on Africa. One of the things that I sometimes, or well, most of the time, try and encourage people who are interested in doing business in Africa is to either be there or have like a strong team on the ground to support their efforts, because I think it kind of navigates a lot of the challenges that you will encounter on the day-to-day operations of doing business in Africa. Being in California, how do you go about navigating some of the challenges that you will encounter trying to do business in Africa?
Yeah, for sure. I think, we work very hard to be able to keep updated on what's going on the ground. If I could, I would spend more time in Africa. In fact, I'm planning a trip out to Africa, just meeting my different partners in the different regions across Nigeria, Kenya, and South Africa, and some of my portfolio companies as well. Because like you said, the hard part about being so far away is making sure that, we know what's happening on the ground.
Yes.
But what we like to say is that, we have the best of both worlds. To counter that, we've actually brought on board 6 venture partners who are based in Africa across, like I mentioned, some of the markets that we invest in, as well as in upcoming markets like Uganda and Ghana, as a way for us to make sure that we stay in touch on what's happening on the ground, that we are also plugged into the ecosystem and know where the best founders and new up and coming founders reside. I think there is also benefits in being based here in California. So we're currently raising, and that also means that a lot of the potential investors are also based in the US. I think you look at kind of some of the bigger companies coming out of Africa, very few of them have been able to reach unicorn status or raise a couple $100 million without taking money outside of Africa. So I think being able to sit on both sides of the regions and being able to kind of walk founders through what foreign investors like US investors are looking for, and having the network here as well has been hugely beneficial to both ourselves as a fund, but also to the founders in our portfolio too.
Brilliant. So you mentioned there that you have 6 venture partners based in different regions all around Africa who help to keep you up to date with local knowledge, what's happening on the ground, whether that's politically or economically. So how have you gone about gaining this local knowledge, local talent to build your network?
Yeah, so I think for me, it's really riding on kind of my past experience working in Africa. So that's a big source of I would say credibility and also network. I think it's still quite rare to meet someone outside of Africa who have experience working in Africa. And both so I also used to work for a Dubai-based VC fund that invests in the Middle East and Africa. So having both the investing and the operating experience definitely lends me some credibility. My partners are also African. On top of the 6 venture partners, I have 2 partners. One's Nigerian, one's Kenyan. So they also bring with them years and years of operating experience on the ground and their networks too. So collectively, I think, for us, it's having experience working on the ground, which not a lot of people outside of Africa have. Yes. And second of all, also just having the humility to know that things change constantly. And that's something that I've learned both working in emerging markets outside of Africa, but also, through my experience of Africa, that things aren't set in stone. Like regulations change, like the ecosystem changes, the players change. And I think that's something where it's exciting. It also means that we always have to constantly be humble and know kind of what our limits of our knowledge is, and to continuously talk to people like yourself to find out more and to understand more about the sectors and the region too.
Thank you for that, Samantha. So you touched upon the value that your partners on the ground in market support you with in terms of the changing dynamics on the ground, and I guess the benefits that brings. So I guess building a strong local network is critical to generating local knowledge, but also a strong pipeline of companies that you can invest in. Can you tell us how you leverage your networks and your local knowledge on the ground to build your pipeline of startups in Africa?
Yeah, for sure. I think for us, one thing that's exciting is our partnerships with accelerators on the ground too. So we've worked with accelerators like, the Savannah Fund, as well as Baobab Network. So really market and ecosystem leaders who have access to, deal flow. And that gives us the ability to look at many different upcoming startups at the same time. The other thing too is really through our own networks with universities. So one of our very first portfolio companies actually came in through our network with universities such as the MIT Business School, MIT Sloan Business School, and that's something that's been hugely beneficial to us too. So being able to stay close to the business school programs in the US, but also being able to stay close to these accelerated programs on the ground. And I think once we start building that network, this also creates a flywheel. So we've also gotten referrals through other portfolio startup founders who obviously are plugged into the system. So I think being able to leverage partnerships as well as, our networks with other organizations, so including like the Y Combinator, as well as, our venture partners on the ground too. So it's really, so people like to ask me like, where's our main pipeline have come in? And, for us, we really say it's really through referrals. Referrals have been a huge source of really good pipeline. And it's hard to pinpoint one particular sauce in that case because, like, the stronger we build a network, then the more that creates a network effect of being able to refer the best companies to us. So I think for us, it's been really fun, like building out those networks. And I think that's also a very positive feeling when one of our partners can say, we have a great upcoming startup. We really want you to look at them, and we look at them and we get excited by them. And, just think that having that ecosystem and where Africa is and where everyone wants to contribute to its growth and its development really helps too.
So you mentioned there that you're connected to a few accelerators on the ground in Africa to support with your pipeline of startups. You're also currently completing the prestigious VC Lab Accelerator program, which is quite interesting. I was hoping you can tell us a bit more about that in terms of why you felt it was important to join the program and what the journey has been like so far.
Yeah, for sure. I think for us, when we wanted to start the fund, we had a vision that it wasn't going to be a one-off. We weren't going to build one fund and be done with that. For us, the vision was really to channel more commercial funding into, like I said, founders who are doing well by doing good. So for us, we wanted to really revolutionize not just VC funding, but also entrepreneurship as a whole, because we believe that true entrepreneurship, it's really about problem solving and wanting to grow businesses that really provide solutions to billions, the problems that billions of people around the world are facing. So when we knew that we're in this sort of long haul, we're looking at decades worth of work, we wanted to make sure that we got our foundations right. And we wanted to make sure that we built an enduring venture capital firm and not just a single one-off fund. So when we encountered VC Lab, which came to me through a couple other people who've done it and other ecosystem leaders who I trust, I definitely was very excited to join the program. Something I hadn't realized was just, I should have thought about it, but didn't know was that, they obviously are hugely popular. They had over 2,000 applications.
Oh, wow.
Yeah, so we're very lucky to be one of 200 applicants or candidates who they accepted into their cohort. And it's been a really exciting process. I think a lot of times, you don't know what you don't know. And VC Lab has been very useful in being able to tell us, like what to look out for, what are some of the hurdles to overcome, what are some of the things that, the common mistakes that are made by fund managers. So really able to kind of get that out of the way without having to make all the mistakes ourselves. And definitely, Mike and Ade, who run the program, have that experience raising over 14 funds before together.
Oh, wow.
Yeah, so the experience definitely sets for a good foundation. And you can also tell that the program's been very well thought out. It's a very structured program in terms of having weekly deliverables and structured curricula, which I find really helpful because it's also a really good way to set the pacing for building the fund in terms of what we had to look for. It's easy to sometimes get lost in the big grand vision and get overwhelmed by it. Yeah, especially one where, we really are tackling a big sector like venture capital, which obviously pumps in billions and billions and almost trillions now of money into startups. But at the same time, when you break it down to much smaller, manageable steps, that's something that makes the goal a lot more achievable and definitely makes us feel like we're making good progress towards that in a meaningful way. Yeah, and so for us, I think being part of VC Labs is a good validation that, what we're doing makes sense, that what we're doing is going to change the world, and that what we're doing is really helping the founders that we want to help, which is why we do any of this. And I think second of all, that, having such a structured program and support system is super helpful in being able to, in making progress in terms of building the fund that we want to building an enduring fund that will be here for the ages and not just for now.
So has the VC Lab program, has it met your expectations? Is it exactly how you thought it would be, or is it slightly different?
I think definitely nothing is what you expect it to be.
Very true.
I think one thing that I hadn't realized or hadn't known going in was just how much the value of focusing. So, initially we had wanted to have a much broader mandate than we do right now.
Yes.
And so by going through kind of like the investment thesis and really kind of focusing on what the value it is that we bring to the table and how we want to translate that into support for founders and the types of founders we're building really has kind of narrowed our focus a lot more in terms of the sectors that we're investing in, as well as in terms of the markets. So, we definitely want to, that's definitely like credit to the VC Lab program. I think for us too, one thing that we hadn't expected in terms of unexpected support is really through the other fund managers. So, having the fellow fund managers go through the program. So we've also broken up into smaller teams or smaller groups with other fund managers. And we meet weekly to discuss some of the challenges that we're going through and some of the deliverables, but also to provide good feedback to each other. I think that has been a huge source of support. And I was having like more than an extra pair of eyes look at our own decision making process, as well as the deals that are coming up, as well as like the ways that we're building the fund has been super helpful. I think venture capital can be a very lonely journey at times because it's really mostly you and your spreadsheets and your decks. Obviously, the most exciting part is meeting the founders and helping them. And, on a good day, we do that a lot. But a lot of times it's also just evaluating founders and evaluating pitch decks. And so, having the support of community has been really helpful too.
Brilliant. So you touched upon a key point, which was the importance of getting your foundations right. So would you say the VC Lab program has influenced how you've decided to structure StoneSoup Partners?
Yeah, for sure. So I think definitely they've been very helpful in providing a lot of kind of structuring documents. So for example, I mentioned the Venture Partners program and the fact that we brought on 6 of them. That's definitely something that we've always known that we wanted to kind of build a team on the ground. But being registered in the US is something that we also wanted to do just for the fundraising side. And I think being able to balance both through a venture partners program for which they provided a lot of thinking and a lot of support around, okay, legally, what does that look like? What would that look like? And how would we run a program like that was super helpful in helping us structure something that made sense for both the fund as well as our venture partners. So I think there's one very concrete example in which they provided a lot of support. I think in terms of the fundraising process itself, like how do we juggle both, being able to build the fund quickly, but also being able to provide the right, like I said, foundations to assure potential LPs is also another thing that they provide a lot of support in terms of answering our questions, what to focus on. So that's also another very concrete form of support too.
So you mentioned there that the VC Lab has helped you narrow your focus and understand where you add value. What do you look for in startups when deciding to invest in them now that your focus has been narrowed?
Yeah, so I think for us, like the first thing we want to look for is just really any kind of experience, kind of like starting something.
Yes.
So this can be a nonprofit, this can be an association, this can be a business before, but having the repeat experience of having started something is definitely one thing that we look for and we prioritize too. Because running a startup is hard. One thing that people don't realize is that 97% of startups fail in the first 3 years. Most of the time, you don't know what you don't know. And going through the experience of starting something at least once means that you have the opportunity to learn from your mistakes already. So that's the number one thing that we look at. I think second of all, it's really kind of a prolonged personal connection with the problem. So we want to know that, you're committed to the problem. Because like at the early stage, we expect that companies will pivot, that the product will change, even markets could potentially change. We definitely see in companies like enter a market and then after exit and try again another market. So we expect a lot of change at the early stages of a company. But what we want to know is that, you have a commitment to the problem. You have a commitment in wanting to solve the problem that you set out solving, whether that's, giving access to SMEs in terms of loans or, making it easier for women to have access to primary healthcare. So we want to know that, what's the story? Like, why are you interested in this problem? What have you done to try and solve it? And, why do you want to solve it now through the current startup that you are building? So I think that's another thing that we want to see too. It can't just be something that, like, oh, this is an opportunity. Everyone's investing in fintech, so let me go start a fintech company.
Yeah.
Like, no, we don't believe in founders like that. So for us, it's really about kind of what your association, what the Founders Association connection to the problem is, and a commitment and drive to solving that problem.
In terms of the data and metrics, what kind of data or metrics do you kind of measure your startups against when you're deciding to invest in them?
Yeah, so I think it differs a little bit depending on the stage of the company. But I think the first thing that we look at is really in terms of the team. So like I mentioned before, like what the team's experience has been in the sector that they've chose to go into is one very key thing. Also, the ability to bring on board excellent people as well, because ultimately you will live or die by your team. So the ability for the founders to bring on board really good people, whether that's advisors or whether that's like, operators and executives to help them grow their company is a key one. I think the second one is really just traction. I've seen so many startup founders, and having been a startup founder myself, I've seen how what we think the consumers want is not often what the consumers want.
True.
So which is why, so for any company or any founder out there who is pre-product, I always tell them, my advice is always like launch ASAP, launch as soon as you can, get your product and your service in the hands of the users as fast as you can, because you learn so much by seeing how your users use your service or product, and that should influence the way that you continue to develop and grow your company. And so many companies like see such great inflections during that point in time. So I think number one, like, founders always come in with massive vision. So for what they want to do and how they want to create impact. But like ultimately, whether or not that actually comes true is whether or not you have users to use your product and your service in the first place. So I think we look a lot in terms of traction numbers, and that's everything from the number of users, how fast you're growing in terms of users, but also in terms of engagement. So like how how well do you retain your customers? How many repeat customers do you have? How often are they using your product or service? So those are all metrics that we look at. And obviously, depending on how mature the company is, the benchmark is different for the development, for the stage of development where the company is. But I would say that those are definitely indicators that we look at, because then that's really how we tell whether or not they're building a product that users love and will continue to use and continue to grow, and whether or not users get value from the product and service that they're building.
Brilliant. So you've gave us some great insight there in terms of the data and metrics that you look at when deciding or when interested in investing in a startup. So if you look at it from the startup's perspective or point of view, what tips would you give to a startup to prepare them for the due diligence process of approaching and sitting down with a potential investor?
Yeah, so I think the number one thing is definitely tracking your data. And this is something that you have to do right from the start, even before you start fundraising. Because if you only start tracking your data when you're fundraising, you're going to have a really hard time getting that data. Um, so just like the day-to-day good practice is really kind of, you should be tracking all of your metrics, all of your growth metrics, all of your financial data as well. Those are two things that, obviously investors are going to be hugely interested in. So the more organized you are around that, the better.
Brilliant.
I think second of all is definitely um, understanding that it's going to be really hard to run your business and fundraise at the same time. So having a plan for how you're doing that, whether, like it's one founder going out fundraising while the other founder continues to run the shop, or whether, how you're going to basically do that, it's going to be key, just from like a very practical standpoint. But beyond that, I think being able to understand what the story that you're telling, in terms of why you're doing this, in terms of where you want to go. So a lot of times, a lot of founders like to ask me like, how much money should they be raising, and how do they even know, what makes sense? And so what I like to say is that, you want to be able to figure out, first of all, what your end goal is. Like, why are you raising this money in the first place? What are some of the goals or milestones that you're trying to get to? And so, being able to work out that plan is hugely important, because all investors want to know what they're going to get with that money, not just in terms of the equity that they're buying in the company, but also in terms of like how their money is going to help the company grow. So knowing kind of like what your goals are with this money, and then working backwards and figuring out, okay, how long does this take for me to get there? Is it going to be 12 months? Is it going to be 18 months? And then, correspondingly, how much money is it going to take for me to get there? And that's how you arrive at the amount of money that you should be raising. And if you take that, and then obviously you need to have, you need to cross-check that with some sanity checks in terms, because if you are a seed company raising like 100 million, unless you have an exceptional path to growth, that is quite unusual and atypical. So usually what we do see is that, at pre-seed, you should really be raising less than 1 million. At seed, you would be potentially raising 1 to maybe 5 million. And then Series A obviously is much more than that. But so if that's something to bear in mind too, in terms of like what investors typically are used to seeing in terms of the round sizes. So I think definitely those couple of things. So being very organized around kind of the data that you need, and the growth metrics that you have, as well as the financial data that you have. And second of all, being able to make sure that the story that you're telling makes sense, and that you tell a compelling story about where you want to go, what your product is doing in terms of the value it's providing, and why you're starting it. And three, in terms of being able to have a trajectory around what the money is going to create in terms of your milestones and targets, and why that amount of money in the first place. So all those are hugely important. And I think four is definitely, just to add on as well, is to start building the connections early, because a lot of times investors won't invest on your first meeting. So what I will always highly recommend founders do is that having target lists or hit lists of investors that they would like to bring on, and start talking to their advisors and to their networks to get introductions to those investors, or any investors that make sense for them, so that they can start talking early. Because the best founders are the ones who can, obviously get more investments than they need, so that they can also be more selective about the investors that they bring on. And so being able to build the connections early is something that they should be doing even all throughout the lifetime and life cycle of the startup, even when they're not fundraising.
I agree. Fantastic advice there, Samantha. You touched on that startups should be organized, understand their story, journey, and end goal in order to prepare for potential investment. So, as a startup investor, where do you believe that you add value to the startups that you invest in?
We add value in two ways. One is definitely being able to, like I said, plug into the ecosystem of investors on both sides, in terms of the US as well as in Africa too. So, as mentioned before, I think none of the big African companies or companies that are coming out of Africa have been able to raise their significant amounts of funding without taking outside investment. So, being able to be plugged into the US ecosystem in terms of in terms of investors, and who is investing in African companies and what they're looking for, is one key point of value. So, like all the points you mentioned in your last question about, why, or what should founders do to prepare for fundraising, that is actually a process that we walk our portfolio companies through, in terms of who they should be targeting, but also what they should be looking for. We work with them to kind of like make sure that their materials, everything from their pitch deck to their financial projections and historicals, are in order and are most compelling. And that's something that we work out their fundraising strategy with them. So that's one thing. I think second of all is that the fact that we also bring in operating experience on the ground. So all of my partners and I have operating experience in Africa and across both sectors that we invest in. And that's something that are hugely valuable to startup founders too. So we've helped our founders from everything from optimizing their supply chain to really figuring out, how to monetize their users, in a way that makes sense for both their users and themselves, as well as working with them to find good distribution partners in new markets. So I think for us, being able to really get our hands dirty in terms of the nitty gritty is something that founders have really kind of appreciated from us too. So I think being able to have support to provide support both in terms of the fundraising side, the investment side, as well as in terms of the operating side, is something that we provide value to our founders.
Brilliant. So it's safe to say that you fully embed yourself within the startups from the operational to the strategic side.
So I won't say that we fully embed ourselves, because I think for me that represents taking a role or taking a position in the company itself. So for example, like I know in impact investing, sometimes, like investors would take on an actual executive role, whether it's part-time, full-time. So that's not something that we do. So a lot of times, we also want to make sure that these founders have the leeway to make the decisions that they think is best, and to run the companies in a way that they think is best. So for us, it's really more around kind of providing the support that they need. And so whether that's like, bringing connections or advice, or, just other kind of like, or opening up our network to them. So So I won't say that we embed ourselves, because I think for us, like I said, it's really a balance as investors of wanting to give our founders the leeway to make the decisions that they think is best, but also making sure that we are there if they need us to be.
Brilliant. Thank you for that. I know that you have a lot of experience investing in emerging markets, not just emerging markets in Africa, but outside of Africa. Would you say your approach in terms of the way you invest or operate with startups in Africa and outside of Africa varies, or would you say it's quite similar?
I would say it's quite similar. So just to provide a little bit of context, so my past experience in investing in emerging markets outside Africa has been in Southeast Asia. So I used to work for a global investment fund that invested in agriculture businesses, specifically the cross between financial services and agriculture. So they invest in Latin and Africa, and I was leading the expansion into Southeast Asia, specifically Cambodia, Myanmar, and Vietnam. And so I love that. I spent every other week in country, basically uh, talking to farmers, but also talking to buyers and talking to entrepreneurs on the ground. Yeah, so I think for me, being able to see tangibly kind of what the businesses are doing is something that's core to me, and that's something that I look forward to doing even in my investments in Africa too. Now that COVID is not dying down necessarily, but definitely travel is opening up again. So I'm very excited to be able to take a trip out and definitely visit my portfolio companies and my partners on the ground to take a look at kind of what they've been doing. So I would say that that's something that I'm hoping to continue doing, and that it's a similarity that is both that carries across both my experience investing in Southeast Asia as well as my experience here in Africa. I think definitely like every individual country that I've invested in has been very different. And that's the same too. So Cambodia is very different, Vietnam very different from Myanmar, and that's the same too. Investing in Africa now, Kenya is very different from Nigeria, which is also very different from South Africa.
Yes.
So I think being able to see those differences and appreciate those differences is also something that I take with me in terms of investing in a region that's hugely as diverse as as diverse as Southeast Asia is, and similarly in Africa, where it's also a hugely diverse space too. So I think knowing that that it's so diverse and so different gives me the appreciation too. But then that I think the fact that that they're both low resource regions is also something that's very similar between them. So being able to understand that a lot of times founders are working against the lack of infrastructure, for example, or the lack of a well-developed supply chain is something that is common to both regions, and something that I definitely pay a lot of attention to. There's a lot of things that investors and founders in developed countries like the US or even Singapore, which is where I grew up, take for granted. So things like access to electricity, access to the internet, access to just paved roads, is something that definitely, people in developed countries take for granted, that, are huge, huge things that that people in developing countries cannot take for granted. And a lot of times those are some of the biggest challenges that founders have to face. So knowing that shapes the way that I look at opportunities, and I look at founders and the kind of support that we provide them to.
Brilliant. So you've touched upon there some of the challenges, the nuances, and the diversity of, I guess, society, culture, economics, investing in Southeast Asian startups and African startups. What you said earlier on, obviously, is a phrase that I love, which is you don't know what you don't know. So what interesting things do you know now that you didn't when you first started investing in African startups?
That's a great question. There's some ideas that come to mind. I think for me, it's just more about putting them to words. The government plays an interesting role that cannot be underestimated. So a lot of times, and we see this in a lot of emerging markets around the world too, which is that the government plays a role where they could both help and hinder the process of a startup. So a lot of times, being able to understand the role of the government is a huge one, and that's something that I'm still learning today. So I think
Yes.
because a lot of times the reason why startup founders would go down the route of like starting a private company instead of say working for the government, changing things from the government, is that there is this perspective that you can move faster in the private sector, and you can, build solutions that way that that you can't necessarily do being in the government. And so, that's something that a lot of startup founders seek to do when they start their companies. At the same time, you cannot avoid the fact that, that's especially in the sectors that we play in, that there are huge regulations at play, and being able to understand how to navigate those regulations is something that that all founders need to learn, and that we as investors are also learning. And then we've seen that play out in terms of the Kenyan government and what they've been doing with companies like Chipper Cash and like Flutter Wave. And so that's something that we're starting to watch very closely too, and that we're continuously learning about as well. And so I think any startup founder who feels like they can side skirt the government can only do so for so long before it catches up to them. And so I think that's one thing that we've had to learn too, just kind of like how to navigate that. I think second thing of all is just definitely the fact that, and that was exciting to me to learn, was just the pockets of just advanced technology that's coming out of Africa too. So like I was very excited to learn that there's actually a growing space exploration community in South Africa, as well as a huge and growing Web3 kind of like community growing out of South Africa too. And so, like it's always so wonderful to see pockets of leaders and founders and ecosystem like that, where it's you're not just thinking about like basic technology, but also deep tech and kind of like the future technology. And I think that for me is very exciting. And so one thing that I hadn't expected, but I was very excited about, was just the fact that different parts of Africa, everything from Senegal to Ghana to Uganda, have been kind of like pockets of innovation where even big companies like Microsoft or like Moderna have seen potential to build out facilities there, because the ability to test new technology in such an untapped market brings about a incredible opportunity to be able to build new products and services that can then be scaled globally. Because being able to be in the center of needing to build things at a low cost way, but at the same time being able to build new technologies in such a blue sky way, where you don't have to overcome legacy technologies, where you can leapfrog to new and emerging tech, and being able to explore and invent in the intersection of low cost and emerging tech is something that's very exciting for people like me who wants to solve some of the world's biggest problems, but also for big companies that want to find new markets to tap into and grow into as well.
Fantastic.
Yeah.
So you've detailed some of the, I guess, positives and also challenges of operating a startup and also trying to invest in startups in Africa. So I was wondering if you can go into that a bit more detail with regards to what are some of the challenges that you've faced in creating a fund that is focused on investing in African startups?
Yeah, so I think one is definitely being able to explain the opportunity that is Africa.
Yes.
I think a lot of people still think about it as a homogenous block. And so I always have to say, Africa is a region of 54 countries and should be treated as such.
Yes.
And so, even for ourselves, I think we made a decision to really invest in sub-Saharan Africa specifically. And so, like just as a way for us to narrow kind of down our focus. And when we say that too, like our anchor markets are really Kenya, Nigeria, and South Africa. And then we also invest in kind of like their neighboring countries that also look at expanding into those three core markets. So I think for us, that's been a big part of a source of learning for us too, and just being and honestly a source of challenge too, because like our initial desire was to really to go in and keep it as broad as we could. And so, like I mentioned before, the process of really narrowing and focusing and understanding how where we think we can play and where we want to focus our energies has been something that we really have to kind of like think deeply about and go through many, many long discussions about too. So I think that's something that has been a challenge for us, being able to even understand as diverse a market as Africa is, and being really kind of narrowing our focus that way. to the markets that we understand best and have the most experience into. Both in terms of our own operating experience, but also myself in terms of the angel investments that I've been making. So that really kind of like shaped and educated my understanding of the markets. And so I would say that, like it's very hard for somebody who has never invested in the region before or has never operated in the region before to go in and do so. Because I learned so much just angel investing. So like I've already
Yes.
operated in one African market, which is Nigeria. But like it wasn't until I started angel investing my own money and putting my own money where my mouth is that I really started to learn more about the differences and also the different contextual, I would say, idiosyncrasies of investing and operating in other countries like Kenya, like South Africa. So I think for me, that was very educational. And so, every time I make a new investment in a country or in a startup that's in a country that I've not invested in before, it really comes to great humility. And it's really a learning process for me too.
Brilliant. You've beautifully detailed the challenges of starting a fund that is focused on investing in African startups. So, in addition to that, what are the challenges of creating a fund whilst we're in the midst of I guess you could call it like a global economic downturn?
Yeah. So, as mentioned before, and I'm not sure I completely went into it, but, Africa is such a new market for investors here in the US that it's seen as it's so frontier and it's so untapped that, it's not a market that a lot of investors who are based in the US have even thought about investing in. So for me, being able to educate and quantify the opportunity has been really key. Um, and yeah, not many people know that it's actually Africa's the only region to record 3-digit growth in the first quarter of 2022, with venture funding up 150%. So this is a tremendous growth in funding, especially when you compare it to what's happening globally. For the fact that 150% is 5x what LATAM and EU is seeing during the same period of time. Well, one thing that people don't realize is that the US and Asia both recorded a decline, 1% year-on-year decline in venture capital funding during the same quarter. So, there's definitely huge opportunity in Africa. The question is just being able to, pull out the data to show that. And I think one thing that's like we're seeing is that the downturn could go both ways in the terms of has both helped and hindered investor appetite in Africa. It's definitely hindered in the sense that people are a little bit more conservative with their money. It's people are starting to, as in most times, during times of uncertainty, people would usually just want to hold cash and want to be more conservative the way they invest. So that's definitely something that we're seeing. But also, because all the typical markets that people invest in, like the EU, the US, and even Africa, are being, are seeing a decline in terms of returns. People are also starting then to look into other markets and seeing where the next opportunity for growth is. So, which is also why we're seeing now this growth in venture funding in Africa that's outpacing everywhere else. It's because people are now looking for new untapped markets. I think the other thing too is that, and this has always been the case, money goes a lot further in emerging markets, and especially in a market like Africa. If a startup raises, say, $1 million in their round, that definitely goes way further and gives them a much longer runway in Africa than if they were running a startup in the US. And so for me as an investor too, that's a huge part of my calculation and what I think is exciting about investing in Africa too, because the downturn's not going to be there forever. Eventually it's gonna, as with anything else, it's cyclical, right? So eventually the markets are going to rise again. And we want to make sure then is that we are actually able to use this downturn to make a lot of our investments at favorable valuations, while giving our startups the time and runway to then build a solid foundation for growth later on when the market starts to turn, so that they can catch the upswing and grow tremendously, and that we can then realize our returns at that point too. So I think people who are affected by the downturn really are taking a very short-term view of this. Some of the biggest companies have been built actually during downturns. Like we see, in terms of like Facebook, for example, or Netflix, have all been built during economic recessions. And I also think that, as an investor, like a downturn's useful for us, not just in terms of resizing the valuations, but also in terms of really kind of narrowing the scope of the number of viable startups. I think when there was so much money flooding the markets, and we see this in the US too, um, startups that really didn't have enough of a value proposition, that really weren't serving the users the way that they should be, continue to coast and float because of the money that's going in. But now that there's, on one hand, less money, but also, like startups too really need to tighten their belts and be able to like ensure that they continue surviving. Like what we're going to see is that the best startups and the best founders will survive and will grow and will thrive. And that for us is also, obviously makes it a lot easier for us to make our decisions around investing. But also, we like to see then that the best startups and the best founders get the money that they should get. And hopefully and ideally, they're also the ones who are providing the most value to their users and the customers.
Fantastic. So I guess we'll see a shake-up or realignment of the ecosystem. You talked about how you've had to educate and quantify the growth of opportunities in Africa and some of the potential positives or upsides that you envision in the long run. So, as someone who has entered the African investment space, what tips would you give to someone who wants to enter that space?
Yeah, I definitely think that as with any other venture capital investor, we are high risk investors, and investing in an emerging market is even more high risk. So that's something that you definitely have the stomach for. um, yeah, so I mean, like I said, regulations change, governments come out with new policies, markets change. All of that's not uncommon, either in emerging markets or everywhere else around the world. I think in emerging markets, it's because it's seen as a lot more foreign, because it's seen as a lot more developing. That sense of appetite for risk, you definitely need that if you're going to go into a region like Africa, for example. But also, I think learn to recognize opportunity too. I feel like because having invested in both Southeast Asia and Africa, I definitely see Africa as being maybe 4 or 5 years behind Southeast Asia. So I know that it's really very much in an inflection point. And that's a lot of data that supports that too. So for example, by 2030, Africa is expected to have the total of $2.5 trillion in consumer expenditure and consists of over 1.7 billion consumers. And that's because it is a region where it's fast growing, both in terms of population, but also in terms of the number of people entering, the middle income sector, and in terms of the growth of disposable income across the board. So I think definitely like being able to look at the future and not just look at what is today is something that investors who want to go in Africa must be able to do. I think the other thing also is just be able to be very well plugged into the political scene in terms of what's happening on the ground. Like Kenya just had their elections. Next year, Nigeria is going to have their elections. So being able to understand the different players and understand how that's likely to affect the economy is something that, you need to have familiarity over. And that's a nice part of having been a political science student. So like,
Yeah.
it's also funny for me because, like what I'm doing today has well, one would think on the surface had very little to do with what I studied in school. But as somebody who did my undergrad degree in political science, who did my master's degree in international policy, like being able to understand the nuances of the politics in the region, being able to understand how something like the African Continental Free Trade Agreement, which came into force in January last year, um, has been able to open up markets worth like $6.7 trillion, and what the potential of that looks like has been super, super useful. So being able to understand that the politics on the ground is also hugely important. And I think lastly, just, like I said, be humble, especially if you're not from the region. If you don't have operating experience, I would say that's the first thing you should do, get operating experience, because it is very different operating in an emerging market, and very different operating in a region like Africa. Um, so being able to have that humility to know that you can't just come in as somebody with no experience in the region and try and do it. That's just not tenable. Yeah, and I think people definitely respect it when someone, puts their money where their mouth is. So I would say, come in, work for a startup, or come in, be an angel investor, and just learn. The first part of anything is just really to learn.
Thank you for that, Samantha. So I guess some of the key points there are having appetite for risk, learn to recognize opportunities, be plugged into the local ecosystem and understand the local nuances and trends. In keeping with the theme of trends, what trends in Africa's startup landscape are you currently excited about?
Yeah, so I mean, I mentioned a lot of it already, and I think that's something that's exciting. But I think one is definitely the fact that like funding for African startups have been growing tremendously. So I mentioned that it's the only region to record three-digit growth in the first quarter of 2022. But in terms of relative to itself, the funding for African digital startups have also grown 2 times faster than global rates between January 2020 and December 2021. I think the other part of it is also that, it's the fastest growing and the second largest mobile phone market in the world. And if you think about like how many things we do, how much we do on our phones, everything from buying things to making investment decisions to getting access to banking services to, obviously just communicating with our loved ones and, or just even trade and just or managing a supply chain, which is everything. People start businesses on Facebook Marketplace now.
Yeah.
Yeah, so like the fact that it's the fastest growing and second largest mobile phone market in the world is huge. Um, yeah, so I think that's definitely a second trend that I'm excited about. And another one's like the one that I mentioned, which is that, just consumer expenditure and just the number of consumers, it's growing and it's going to hit $2.5 trillion in expenditure and 1.7 billion customers. And that's immense. That's like, think about it. That's just a number of population that's going to be in Africa. That's like 2.5 billion. It's a huge part of the world. And so anybody who doesn't see that as an opportunity has just, has a head in the sand. So,
I
so
agree.
I think, like a lot of times, like just a sheer population and just also how fast it's growing is another trend that I'm hugely excited about. Yeah, and I think slowly people are just also recognizing the need to invest in infrastructure and the need to, and both digital as well as, physical infrastructure. And I'm sure all of that is just going to feed into how fast companies and how much more people can do too.
Awesome. You've given us some great statistics and insights into some of the future forecasts of Africa. So, the future of Africa, from your personal perspective, where do you see Africa in 5 years' time from a startup investment space?
Yeah, I think definitely, Africa is probably about 4 or 5 years behind Southeast Asia. And, we're definitely seeing that. And what I think is that what's going to happen in 5 years' time is that we'll see a tremendous growth in Africa that might even overtake where Southeast Asia is right now, just because of its sheer size. And so I'm excited to see a lot of like new companies come up, a lot more funding going to the region, a lot more unicorns come out of it. We're starting to
Brilliant.
see unicorns like InterSwitch, like Flutter Wave, like Andela, doing a lot of really great work in Africa, and we're going to continue seeing that too. And I think what I love about like specifically Africa as a region and the startup ecosystem is just how much of it is driven by solving problems on the ground. Like I mentioned, like 54% of all venture capital funding last year went to fintech startups. And that's because a lot of startups that we're seeing come out of Africa are in the financial services space. And it's really around kind of like how can we give people who have traditionally been unbanked, who never had access to financial services, now start to gain access to financial services, but in a way that's sustainable, in a way that doesn't lead to them being deeper in debt, which is something that I've seen a lot of in like, say, the microfinance institution, a lot in a lot of other places. So a lot of times I think we've seen like we're also learning from the mistakes of other countries and other I think ecosystems, and I think that's something that Africa would do well and is doing well heeding in terms of what is sustainable in long term. That growth cannot come at all costs, that growth has to be based on a good foundation of a good credit score, of like financial literacy, of having systems that not just help banks but definitely help the consumers and the users. So that's something that I'm hugely excited to see grow, continue to grow, and continue to expand. I think the other place too is that people are also getting more aware in terms of being able to use and leverage the technology that's coming up to start their own businesses. Africa has the most number of entrepreneurs, and I think entrepreneurship very much is in the culture. Um, and I think that's exciting because, with more and greater systems. So, for example, we invested in a company that gives people the ability to run businesses out of their phones, and that actually has really helped people be able to run their own businesses and bring in alternative income sources for themselves and their families. And so we're excited to see how new technology is able to bring opportunity to the people. And I think investing in Africa, definitely, we're seeing a lot of startups do that in terms of the startups that we want to invest in, being able to invest and being able to bring in not just financial returns, but also create immense impact on the communities.
Fantastic. So if we look closer to home, where do you see yourself and StoneSoup Partners in 5 years' time?
Yeah, we definitely see ourselves being able to fund and back more founders who are doing good work in Africa. Definitely in terms of wanting to help create the next generation of growth, both in terms of technology as well as in development. Yeah, and for us too, we want to be able to raise significantly larger funds progressively so that we're able to back more founders who are doing great work. And I think continue to grow our network on the ground too. Like I foresee myself traveling at least once a quarter. And we're also, depending on what we're seeing come out of the region and how it's developing, we're also not opposed to the idea of definitely being based in Africa and growing our network and offices there too. So all of that is very exciting. And I look forward to continuing to learn more about the region and more about the individual companies that we will help to grow. But for me, it's really about helping and backing founders who are doing great work, who are really kind of creating the future as we speak, and seeing how that future will be one that's better for everybody and one that helps people in overlooked places be able to fulfill their potential.
Awesome. Great vision, and I'm extremely confident that you'll achieve all of that.
Thank you so much.
Quote of the week.
As people, we often have quotes, mantras, proverbs, or even affirmations that keep us going when times are good or when times are challenging. Do you have one that you can share with us today?
Two quotes come to mind when you ask me that. One is obviously Steve Jobs, one on how, you can only connect the dots looking backwards, not looking forwards. And for me, that's been true of my life. And that's been true of a lot of founders that I've met and their lives too. Just that, a lot of times we go where we find inspiration and we go where we think that we can contribute the most. And it's never a linear path. So for me, I've come from Singapore and now in the US, investing in Africa. And the journey that's taken me to get here has been a tremendously exciting one, but also one that I could not have planned from the start. Like there's no way 18-year-old Sam could have thought that, that this will be what I'll be doing today. And yet if you look at every step of my journey, it really has brought me here from, working with founders through the nonprofit consulting firm that I was running to eventually investing in emerging markets to now, channeling funding to a fast growing region like Africa. I think definitely it all makes sense looking backwards, but it's definitely not something I could have planned looking forwards. So that's one. And I think the second one is also one actually by Rabbi Tufform, which is kind of an unusual one for me. But it really says, "It is not your responsibility to finish the work of perfecting the world, but you are not free to desist from it either. Know that you are part of the living chain of people who have dreamed, worked for a better world, and carried on this mission for 4,000 years in an unbroken covenant."
Amazing.
Yeah. So to me, that represents that, people who really change the world are the ones who have a big vision for doing so. You need to know what you want to change the world into and what you want it to be before you can even take a first step in that journey. But at the same time, don't let your vision overwhelm you because in some ways it's not a work of a single person or a single generation, but trust that, the work that you do will bring you closer to that world that you want to build and that we are all building on each other. Like I stand on the shoulder of giants and I could not have done my work without so many of the leaders who have come before me, who have invested in Africa before me, who have really done the hard work in building the ecosystem. And I am but part of that chain and people who continue to do so.
I love that one. I've never actually heard it before, but it's a fantastic quote. So thank you for sharing it with us today, Samantha. And unfortunately, we're coming to the end of the conversation. Do you have any closing remarks, final calls to action for anyone who is interested in the work that you're doing or just genuinely interested in startup investment in Africa?
Yeah, I would always love to talk to more people who are interested in investing in Africa or would love to support the African startup ecosystem anyway. So feel free to reach out to me. Just drop me an email at Samantha at StoneSoup.Partners. We'll love to chat and share kind of what we're seeing, but also learn to, connect with anybody else who's interested in working alongside us, or just if was just curious and want to know more about investing in Africa.
Brilliant. That's been a fantastic conversation. Very refreshing. I guess it's great to get your perspective as someone who has recently entered the African startup investment space. I'm confident that your story will inspire many more people in terms of sharing their experience or even considering entering the African market. So thank you for that. It's been a pleasure to have you on the podcast today, Samantha.
Thank you so much, Tessa. It's been a huge pleasure for me too. I really enjoyed talking to you. You've asked some really great questions, some zingers in there for sure. But thanks so much for the opportunity to share more about something that I'm passionate about, so I'm really grateful for that. And it's like I said, it's been a real pleasure talking to you.
It's been a pleasure having you on the podcast. And I'm sure we will be in contact soon. So look forward to further conversation. And thank you for joining us today on the podcast.
Definitely. Thanks so much, Tessa.
Thank you to everyone who has listened and stayed tuned to the podcast. If you've enjoyed this episode, please subscribe, share, or tell a friend about it. You can also rate, review us in Apple Podcasts or wherever you download your podcast. Thank you and see you next week for the Unlocking Africa podcast.